this is the only day trading strategy that you will ever need. Since it's that repeatable, you can master it, and if you master it, you will be profitable. Okay, first I'm gonna explain what you will need for the strategy and what you should know to actually execute this strategy. You should know how liquidity works. You should know how fair value gap works. You should know how pair structures work. You should know how order blocks work. You should know how Fibonacci's work, but I can explain that. It's really easy. And you should know, actually I'm gonna explain in this video, how volume works. Okay. What you basically look for is, you go in a high time frame and you search for consolidation that you see. What do we see here? We had this consolidation. This was the last consolidation, so this was kind of like a box. But then it broke out of that, making a new low for the consolidation, a new high, and now this is a consolidation again. This is actually the hard part of the strategy, I guess, because you have to understand where the consolidations are, or where the boxes are. As you can see here, it just comes with experience. If you trade it a lot, you will see it. There's just new, it's overall in downtrend, and there's a new low made. It bounced around that thing and then it broke that low. So this is the new box. And if you find this box, what you're gonna do is you're gonna take the fixed range volume profile here and go from the beginning of the box to the end of the box. And you will have a volume area right there. A volume area is just an area where a lot of people are trading in this area, okay? Which means if it breaks out of this area, there should be an impulsive move. And this is exactly what we are waiting for. So if you go here, you will see that it actually just bounced in this area here. It bounced kind of on this area here. And then we had the impulsive move. And then we had the retracement. And all you have to do, legit, this is all. Obviously, you can combine it with more, with fair value gaps and stuff. But you take it from here to here. And you wait until it hits the 0.618. Wait, I'm gonna show it real quick. Here, the 0.68 and 0.618, because this is backtested so often that this is the perfect numbers for retracement from Fibonacci. I didn't found the numbers, I just heard from them, and this are the golden zone from Fibonacci, okay? I want to quickly introduce my partner, my flash funding. I'm not just saying this because they're my partner. I really like this prop firm and I think it will be one of the biggest in the future. They have such a small profit target by just 6%, which is easily obtained by just two 1 to 3 risk reward trades. And if you want to get yourself an account, this is my code. Link is in the description, and let's go into the video. So if it hits Fibonacci golden zone, you want it to be combined with a fair value gap or something. And here's perfectly a fair value gap. And it bounced on that volume area while having the retracement from the impulsive move. So you just wait for impulsive move into retracement into fair value gap golden zone. And then you enter. And what you aim for is basically, if you know that the impulsive move is good, you learn this from a lot of experience, you will know where you can aim for. For example, if you're in a downtrend and we drew this box and you know this is a good impulsive move, you could be aiming for all the way down here. But if you see it only having like a small impulsive move, I would only aim for this liquidity. You just have to find if the impulsive move is good enough to actually aim for something that big. You just have to kind of compare it, okay? So this comes with experience, just backtest it a lot, and that's already kind of it for that. But there's things that you can do that is kind of advanced for the strategy, but it still makes it way better. What you're gonna do is you do the same in low time frame. So if you're doing this, where you're making the boxes, you go in lower time frames and do the same thing. So you make it from here to here, and if you find it having it is on the same point as the high time frame volume area, then it's more likely to do it. So if you have both combined, this is a good sign that the trade will be good. And this is already kind of it, but I'm gonna actually backtest it. I had to reset the whole thing, but it's whatever. We're just gonna do the same thing where I'm gonna pass forward a few days. I think it's a different pair now, but it doesn't matter. Next day a few times. So you know I'm not cheating. Okay. So, what do we see here? Instantly, we see the consolidation right there. So you're gonna take the volume, as I said before, from here to here. We have our volume area right there, and we just, make that red. We just broke out of that in lower time frames. You probably bounced in that level right there. You see that we bounced in that level here, So what, actually it's not a valid bounce though, because it bounced here, but it didn't instantly impulsive move, so I don't count it as valid. But it made the impulsive move out of this range. So if we actually retrace to this golden zone, matching with like an order block on the top and the Fibonacci golden zone, we could take it. So let's see what the market does. But by the way, it doesn't matter what time you trade it, you just make alarms when it goes there, because sessions are, doesn't matter what session you trade, because it's just less volume in some sessions and there's more volume in other sessions, so it doesn't really matter. So what we're gonna do now is we're gonna go in lower time frames and see a clean break of structure, because movement is way too choppy right now. As you can see, it's way too choppy. So what we want is a clean break of structure to the downside. This is not clean, so we're not gonna take it. It's going up, so this one wasn't a good bounce. It's probably gonna bounce now. As I said before, it wasn't good enough. But if we go in higher time frames real quick, we can actually continue and make it to the newest point, and we will see that the point actually changed. That's also important, that you always look. Now it changed and it actually is here now, and this one was the bounce. So it's important to always go in higher time frames again and see if the volume peak area changed. And now you see a reaction of that, which is actually really, really good. And we can also see in lower time frames that this area is also consolidation. So we could easily make this as a take profit if it now makes a good break structure to the upside. Okay, it bounced on this thing again. So I wanted to have a Fibonacci retracement once again, because this is not a Fibonacci retracement, this is a bounce. This is really important to know the difference. So this is the bounce now, so we wait for impulsive move up. Exactly. And now we wanted to go down into the golden zone. Good beggar structure. Long position. You can make the stop loss there. You could even make it here if we want to make it safe, but this one is normally good with these numbers. 0.78. It's, by the way, really good to have something like this, because then you can backtest it way easier if you have set numbers. And I would aim for the volume thing here, and this is a good trade then. So let's see. This was insanely close. I won it, but this one was probably news or something that it went in both directions. It's whatever. It worked out, but this one was risky. I'm not saying this strategy always works, but if you master it, you will be profitable with this one. So I hope I could help you. If you have any questions, just ask me in the comment section. Also, I have a Discord where I'm giving away fun accounts nearly every week. I think I give a fun account every week. I don't even know. Like, it's random. Depends on how active the server is, you know. But I'm really trying to help the people in there getting profitable, and if they're profitable, giving them an account to actually start making living out of this. So join if you want. Link is in the description. Thank you for watching, and bye bye.